Okay, guys, so this is Cost Accounting 251, and we're going to do in Chapter 1. Now, Chapter 1 is very important. There's a lot of concepts over here. If you do not learn these concepts of these basic calculations, you won't basically know what's going to happen in the future chapters. So let's get to it, right? So starting off now, it's starting over here, right? Now, okay. So what is management accounting? Now, management accounting in summary is when you do accounting in a business. Now, people who do BCom accounting will know this, right? Management accounting is different from accountants that are external to the business. So, do you know how you get auditors? They're basically like accountants who will come in your business and make sure you're complying with all your regulations and your financial statements, check if there's no fraud and all that. That's external. But if someone in the business does accounting, helps the business to make decisions about the money in the business, that's management accounting. So, management accounting in summary is basically people in the business, accountants in the business, who look at ways in which they can save money, make full use of money, do things with the money like budgeting, that basically make sure everything related to money is good in the business. So decision making is very crucial, right? Because you have to make sure the money is going for the best places possible. So obviously now management accounting is different from actual accounting, right? Actual accounting is basically external to the business, so it's different. Now going on over here, financial statements, financial accounting is more of external users, as I said, right? All this is external users, right, who use the financial statements. Obviously, you need a financial accountant because you need to make sure someone outside the business is working on the financial statement, because they need to be non-biased. Because if you get someone inside the business working on a financial statement, they can favor the people in the business. They can do things unhonestly. So best to get someone who doesn't know the business to go and audit their financial statements. So that's what this whole thing is saying. Now, decision making, planning, and control, right? Okay, so this is the decision making process. Now, I'm not going to discuss this so much in exams, but you must know it, huh? So, when you need to make a decision, for example, you need to decide if you must launch a specific product in a business, you will identify the objectives. So, identify what the product must do, what must it be, like your sales will increase, all that. Then you search for alternative causes of action, right? So you look at different ways of launching the product, right? You can maybe launch the product in Johannesburg, Durban, Cape Town. You can use different machines, all that. We'll select the best one from all the alternatives we did in the step before. Then we'll implement the decision. So we'll choose the decision here, and then I will actually do the decision, buy all the equipment and all that whatnot. Compare actual planned outcomes. So when the machine is working and the products are made, we'll look at the product and be like, is this product good or is this bad, right? Sometimes you manufacture products, it's not good, right? There'll be defects, there'll be broken, all that. So that's what it happens over in this step. Last step, respond to divergence. Divergence means differences, so you need to respond. If you see out of 10 bottles, 5 of them are breaking, you need to make sure the material is better so there's no more breaks. So you need to respond if there's anything wrong with what the products are. Now, there's different type of costs, right? Now we're going to be looking at all different type of costs, right? Um, Cost behavior. What is cost behavior? Now, cost behavior is the behavior of the cost. So behavior in terms of humans are like, are you a naughty person? Are you a good person? When you look at cost, they also have a behavior. They can either behave good or they can either behave bad based on something you do in a business. So if you picture a business, right, and you're producing products, if you bring in another machine, there's something going to happen to the cost of making that product, right? If you're bringing a more high-end machine, it's going to be more expensive, right? Your products you manufacture in the machine is going to be more expensive. That will make costs go up, right? So the behavior cost, what will happen? It'll make costs go up. If you bring a machine that actually saves energy, actually produces more products efficiently, costs will go down. So the behavior costs will go down. Now there's different categories of costs, right? The main one is variable costs. these costs vary depends on what you produce, how many units you produce. For example, if it costs you 5 rand to make a product, if you make 20 products, right, it's going to cost you 100 rand, right? 20 times 5. So one product will cost you 5 rand, two products will cost you 10 rand. So you see, the more products you make, the more it'll be, the more expensive. So that's what variable cost means. It's not constant. Like, it'll be constant if I said one product is 5 rand, the second product you make is 5 rand altogether, third product you make is 5 rand altogether. No. Altogether, the amount is going to change. If you make 3 products, the total amount is 15 rand. If you make 10 products, the total amount is 150 rand. No, sorry, 500 rand, yeah. But basically what I'm saying, the total amount is changing, which depends on how many units you produce. Then you got fixed costs. These are like your rent, okay, all that. It's basically fixed. It's like 2,000 rand per month. That's it. No matter how many units you produce, you can't say you produce 0 products in your business, I don't have to pay rent. No, you have to pay rent. Total cost for rent will be 2,000 every single month. That's fixed cost. It doesn't change. Whether I make 1 product, 0, 10, doesn't change. Mixed cost. Don't get confused between mixed cost and step cost. Completely different. Mixed cost is basically semi-variable cost, as you can see. Same wording, different ways you can say it. Semi-variable cost is mixed cost plus fixed cost. The best way to think about this is the telephone account, right? Now, a telephone account, you'll basically pay 2 sets of amount. You'll pay the telephone account for the telephone line you're using. So that's like 100 rand. But you'll also pay rands, or the amount of money for how many calls you make. So calls. So this 100 rand is fixed, right? You'll pay 100 rand because telephones, now obviously now telephones are outdated, but telephone lines, you see it everywhere. You pay to use telephone lines, right? This 100 rand will remain forever. Whether you use the telephone or not, you'll have to pay 100 rand per month. That's a contract. But your calls will vary. If you made 1 call, it might cost you 1 rand. If you make 2 calls, it might cost you 2 rand. If you made 100 calls, it might cost you 1,000 rand. But what I'm trying to say is, this is variable and this is fixed. So if you have 2 costs over here, variable and fixed, they call it semi-variable cost, also known as mixed cost. The next one we're going to do is step cost, right? Now, what is step cost over here? Step cost is when there's different costs for different sets of like conditions, okay? So I want you to picture running from here to a certain place, right? So let me just draw it. So you need to let's see, this is the start, this is the end. You need to run over here, right? Run all over here. Different roads charge different prices. So when you're running across this road, they charge 10 rand to run. If you're running across this road, they charge 15 rand to run. There's a different charge in a certain period of time, this complete time, as you can see. This is one road, but half of the road is charging 10 rand and half of the road is charging 15 rand. If you graph this, it'll look something like this. That is why it's called step cost. Because on the first half of the road is this. Second half of the road is this. As you can see, the second half was more expensive, represented as this. First half is represented as this. The reason why they call it step cost and there's a sharp incline up is because you move from 10 rand to 15 rand instantly once you meet that threshold or meet a specific area where the cost changes. Now this is the most example I'm thinking of what it'll be. So sometime a machine will basically it depends how many units you produce. If you produce only 10 units for a machine, it might cost you 100 rand if per unit. If you produce maybe 20 products, it might cost you 150 rand per unit. So as you can see, if you produce anywhere between 1 to 10 products, it's going to cost you 100 rand. But once you go to 11 products, 12 products to 20 products, it's going to cost you 150 rand. So yeah, as you can see, it changes, right? Now the meaning and use of cost. So what is cost? So cost is basically the money that you need to sacrifice in order to make something, right? In order to buy something. You got two people, right? One has 10 rand and one has a product. For you to get that product, you need to sacrifice. What that means? It means you need to give up the amount of money you have in the hand and be like, hey, take my money. I'm sorry. Take my money. I'm going to sacrifice this money, but in return, you give me the product. And that's what cost is, right? When you manufacture a product, right? You're basically sacrificing cost for the product. You're basically saying, take away my million rand, but give me my manufactured products. That is sacrifice, right? And in the next video now, we're going to be doing chapter 2. Okay, so chapter 1 is done. That's all the definitions you need to know. Now chapter 2 is very important, these diesel graphs.